All right, guys, so we are live. First off, this is sponsored by Prime XPT, right? So I'm gonna post on the YouTube video. I'm gonna the ref link, right? So if you want to support this and want this to continue, you gotta show support by signing up. All right, that's the way to keep this moving forward. And I want to try to make this more educational instead of telling you guys where to buy and when to sell. Okay, instead you can make your own decisions, right? Because overall, most important part of trading, right, is to have a sort of understanding of actually what is going on and to follow the market, right? The market is dynamic. So in the beginning of the session, I just want to go through some of the bank reports from today just to give you sort of a taste of what kind of narrative that is being pushed, right, to all customers in the banks and whatnot. So we're having here from the Barclays, too fast, too furious. So in the US, recent negative data surprises might not be reliable. Go for the outlook ahead, and we recommend a tactical short position in the front end. In Europe, risks are titled to higher ECB terminal rate pricing. In Japan, we continue to recommend a cautious investment stance in the long sector. Okay, so let's go further. Just going to read this and then discuss it. So FX Daily, so far so good. Risk assets are largely holding onto the 2023 gains by the view that the recession may be mild, right? So the key word here is that the view, right? So the banks, the view that the recessions may be mild, okay? And that slowing pressures could allow the Fed to respond if need be. This has left the dollar gently offered ahead of next week's Fed and ECB policy decisions. This week, focus will be on US Q4 GDP, PMI readings, and rate decisions in Canada and Hungary. All right. So overall, we're having the rate decision and policy decisions coming up in the beginning of February. Okay, so risk assets and assets in general, they're holding up good now in 2023. Okay, in awaiting for early February to see what kind of stance the Federal Reserve will have on the FOMC meeting, right, and see if they are actually going to start slowing the pace, or what kind of stance they will be having, right? So quickly going to read this through. You can just screenshot it, right, if you want to watch it. So we recently pushed back the timing for our outlook for a mild recession, right? This is another bank as well. I think this is Bank of Australia. We recently pushed back the timing of for our outlook for a mild recession in the US by about 1 quarter. So that means that what they're saying is that they think from Q2 that we're going to see sort of a mild recession from the second quarter of this year. Okay, so what they're saying is that basically the recession now is lagging. Okay, and keep in mind that this is not facts, right? This is dynamic, meaning that every week and every month this can change, right? This is the current outlook. So you have to keep on following this week by week to have sort of a correct understanding and stance to this. Okay, so a less aggressive Federal Reserve, okay, downshifting to 25 base point rate hikes. So in our revised outlook, we still expect the Fed to lift the target range for the federal funds rate to 5.25, right? So they're raising the long-term target, meaning that they want to have higher rates than what we expected, okay? But the pace is going to be slower, meaning that it's going to be less aggressive on the economy, which might be a good thing. With inflation falling rapidly with inflation falling more rapidly than the Fed expected in recent months, right? So the banks are saying basically, okay, so we're seeing actually inflation come down more than the Federal Reserve expected in the recent months. So they think that they will downshift the rate hikes, okay, in February. So instead of raising by 50 base point, they think that they will cut it to 25 base point and potentially sort of expand it more throughout the year but less aggressive, okay, which is more or less, we can argue that it's more or less a bullish thing to risk assets, meaning that they will be put less pressure on. All right, so you can screenshot and read this if you want. So the next one here is also from Bank Report, the screenshot. United States, the slowdown in manufacturing output accelerated in December, retail says. Underwhelmed economic momentum continues to ebb. Nonetheless, we see enough momentum in consumer spending to push the start of a mild recession into quarter two. Right, so the same narrative. Okay, so from first quarter, they were expecting, okay, for recession to hit in the first quarter, but usually it's difficult to time it, and we're seeing now it's lagging behind, and they're now calling for a mild recession in quarter two. So and they also this bank as well, they expect a 25% base point rate hike in February instead of the 50 base point. Okay, so this is what they're expecting, and when they expect this is also some of the reason that why risk assets, has been propped up fairly aggressively, the last few months as well. Okay, so now let's go away. Let's take a look at the charts. So I told you guys yesterday that I will share in the link that I will post on YouTube below. I will share the template for this. That will mean the EMAs, colors, indicators, and whatnot. So instead of putting too much on the chart, I try to find some decent indicators sort of to put on the chart. What I find what is important, right, which I use because, as you guys know, I like to use naked chart, but there are some things that I do find important as well. So just going to show very quickly here. So we're having EMA. I use just the 20, 100, and 200, okay, and I don't have them on lower time frame. So if you go to the 1 hour, I usually I take them out. Okay, I don't have them on below 8 hour. I don't use EMAs. I just want to watch them on the daily and weekly, etc. Just to understand, where sort of algorithms and whatnot. Banks are also watching them. Okay, so then we're having as well ADR, which is just average range. Okay, which I find very helpful. You can use trailing stop loss for it, bullish, right, or bearish target, and you can see what is sort of average for a daily move, okay, and you can see that we're having 50, okay, and the extreme part 125%, and you can see how it sort of lines up with some of these targets, right? So just right off the bat, I really like this extended target. You can see we have a consolidation there as well for intraday movement if you were to trade this, okay, and you can also use this for a weekly target, right? So on a weekly basis, how high can price go? Okay, so from current prices, if this is the low of the week, if you do get a pump, you can say that the extended move, you do get an extreme move that goes close to the second top, the 100% and primary target is sort of would be sort of a double top, right? So you can see that these are fairly nice, and they usually correspond with other levels as well. So for the bearish case, you can use the same, right? So for a weekly target, you can see that the primary and the secondary is just below that low, okay? And you can see how the extended move is close to that next low as well, okay? So that's something you can use to see sort of what kind of targets do you expect per week or per month, right? So you can use this as a monthly move as well. So if you do get an extreme monthly move, right, with this as the current high, if you do get a sell-off, you can see that an extreme move would be back down to 3, right? And you can see how we're having, and then you're having sort of the scaling, the 50% scaling, which already happened, right? So we basically hit the first ADR level, okay? And then you can see sort of the next one will be close to this bottom, right? And then the extended is close to this SR point, okay? So that's something you can use, and you can use it the same for a monthly part for the bullish scenario. As if you go to the bullish case for this, and we can zoom out just to see where it lands, and you can see sort of how nicely it goes, right? So from the low here, you can see that the first target will be just above this high, right? And then the next one, the primary, will be a double top or a target for these two equal highs, and then the 100% target towards the extended as well will be sort of the top, right? So an extended monthly move would take price back as a retest of the all-time high. Okay, so this is sort of where you can use as confluence what to expect throughout the month, right? Okay, so then we also have we can do the first one, which is just market structure. Okay, and I put off most part, and I just kept this, right? And it just shows you structure-wise the weekly high and low, daily high and low in terms of a market structure. Okay, and it's just to have a visual guidance of where the nearest draw on liquidity is. Okay, so you're having on a daily basis the first draw on liquidity, right, will be below this low, and the weekly market structure low will be just below these targets, right? And then you're having the daily market structure high and the weekly market structure high. Okay, it's just to see where the draw on liquidity is, so you don't forget it. Okay, sometimes it's very easy to overlook those levels. Now the other one, the last one I do have here is the 70 and 80, right? You can choose yourself which kind of fib levels you want, right? And it automatically calculates the fib relationships, right? So on a 12-hour, it gives me from this low to this high. Okay, and these are indicators, so they are of course not perfect, but you can go, let's check if you can get some other, right? So if you do on a 3-day, you will see that this is sort of the 80 and 70% will be from this this low to this high. Okay, and you can double click and you can use the reverse there, and you can see from that high to that low where the inverse will be. Okay, if you were to short it or whatever. And you can use these targets as well as confluence with ADR tools. Okay, so if you put on an ADR and you go to a monthly bearish case, okay, and you can see, all right, so you see the extended move will take us down towards these targets. Okay, and it's just as a confluence to where potentially look for a long if you do get there, or if you're in a short position, it will be a very good place to start trailing profits as well. Okay, so all right, so that was in simple terms the indicator, and I'm going to share this as well. And the last part I do have, but I don't put it on often, just to keep it there to remind me, is economic calendar events. I find this very good. Give me a second there. So you can see it gives you, you shouldn't really use this on a high time frame. You can take out which ones you don't find interesting. Okay, so I just I kept PPI, CPI, NFP, okay, and FOMC. So then when you zoom in, you can see when and which data points will be released, right? And you can see to the upper right corner as well. So you're having here you can see how we have 1st of February we're having FOMC meeting, okay, and then the 2 days later we're having NFP, okay, and it's time based as well. So you can see the exact time. You will see it into your own schedule that you put on TradingView. Okay, so of course you don't keep this on, it's just a clutter, but to remind you, you can see that we're having a gap here from this sell-off to this one. You can see how we're having a gap until the next one, and then you can start understanding how price might trend, meaning that if price moves up in towards some of these interesting levels into the CPI, or the FOMC, let's say we're having some bad news, right? And then you can potentially, and it expands whatever, you can expect price, right, to potentially start moving lower into the next data points, or the opposite, right? So if it's a bullish case, or we're having data points that are bullish and something to support markets, we flip sort of the 70 and 80, right? And we start moving above, you can start bidding this in towards sort of the next data point, right? Because markets move on data points as well, okay? And daily targets and weekly, monthly targets are highly important to take with you for multiple reasons, because banks, except that banks have a lot of money to trade with, they're not so interested in lower time frames, and lower time frames are probably left for bots and algorithms to trade, while portfolio managers use larger movements and high time frame charts, right, to dictate the narratives, and they're pushing towards those orders. So they will never leave orders. They won't chase the market, right? So, if they want to take short positions, they will leave orders higher up, and the large orders will also can be used or can be viewed as a magnet, and price will sort of draw into those orders as well, okay? Because remember, if the order book is fairly empty, price will need to draw to meet the prices that is being offered, or however you want to view it. All right, so let's just go out now and just take a look at the chart. So for me, what I find interesting and important is to watch NASDAQ, S&P, and Dow Jones. You can choose yourself. You can watch all of these as well, okay? And as well, I also have the RSI here on the bottom, but instead of having it in a new panel, I have it on the chart. Okay, so this is on the chart, close to opacity very low. Okay, so it doesn't really bother me, just to see sort of if you're getting any major divergence and whatnot. Okay, and the reason why often it can be a good idea to keep this on the chart, especially on high time frame, is sort of getting a feel of what is actually going on. Because when you're having momentum shift in terms of EMA, and you don't having any divergence on the RSI, and you're having draw on liquidity higher, it's easier to flip your bias. Okay, it's much easier to flip when you don't have anything on the chart telling you. It's much easier to get in a bad spiral where you keep on shorting and shorting. And I'm not talking now about one monthly pump. I mean more than that. All right, so let's start off with NASDAQ, okay, which is tech companies. And I just want to show you guys sort of the narrative here before we actually go into into the crypto chart. Okay, so let's take off some of these ones. Yeah, it doesn't really matter. So we're having here a larger downtrend, okay, and NASDAQ has been very weak, okay. There are tech companies, you can argue, similar to whatever you want to call crypto, all right, sort of in the same business, and they haven't moved a lot upwards. We have market structure highs within these levels. We're also having the 100 EMA here as well, and then we're having the 200, and you can see that we're trying to flip that. Okay, so in terms of a range, we can argue that these highs, just want to point this out. So for me, the range will look something like that, right? Especially where we are compared to the other ones, and you can say that the range will be, you can argue, around these levels, okay? And this is sort of the range where price will be traded before you make up sort of a larger high time frame direction, okay? And since the tech companies are more like crypto, once these NASDAQ goes, it usually rallies, and you can see that liquidity is can be higher, and the bars as well, the price movements are usually much more aggressive than Dow Jones, S&P 500. We usually have much smaller candles. So what I'm trying to say, that this here, you can view this as a range. If you view this as a range, okay, and you can view it the same as you're having the EMAs there. So price will be compressing, meaning that above these levels, right? So if this turns into sort of the stop run, okay, and we're having a mild recession, the Federal Reserve starts supporting the economy, or having a very dovish stand and whatever, right? And this turns into, call it a deviation, whatever, but it's a range, okay? And when that goes, that can turn a deviation like this would you can argue, you can call it accumulation, okay? So price goes up, And if you're starting to flip this, okay, whatever pullback you sort of get within that doesn't really matter. And price breaking above this, meaning as well that EMAs will be flipped, right? EMAs will be flipped. Market structure as well will turn bullish with high highs, high lows, okay? And this will symbolize to the market that, you know, that we will be sort of, that the market is strong, and you will often see a rally towards the high, okay? And then you're having the 70 and 80 retracement as we showed you earlier, that was on top of the chart, into this sort of structure. You know, you can call it supply, right? It's not really supply, it's just a place where market obviously start taking profits, or people who are with opposite opinion usually take a position, right? And you can hear you having some equal highs and some void, right? Here's your void, this is your equal highs, okay? And this will be a bullish level where you sort of can expect price to move towards if we break above, right? So if you break above this and the market actually turns into a positive sense, we can expect price, right, to start rallying towards these highs, okay? And it will be supported as well with the EMAs and whatnot, and this here is then a cumulative pattern, okay? This will be a cumulative pattern. So if you take these away and use some bars here just to show, right? So it means that price will accumulate within these price levels, right? And then you will see price start pumping upwards, right? Accumulative, price expands into resistance, probably see some kind of a reaction, you know, and then you take it from that. Now, the other argument there is that, of course, if this structure, even if it rallies towards the upper boundaries of this range, or just trying to take a run at the weekly market structure high, instead, right, of actually going above some of these levels, you can see you see a rejection, whatever, and price retest and start sitting heavy, means that you're having here higher, the high, lower low, lower high, lower low, lower high, okay? And if you're getting another lower high and we're sitting at the lows, if price starting to expand towards a lower low, this is what then will be turned into a larger distribution instead. Accumulation and distributive patterns are equal. It just depends on the narrative that will be pushed out from that range, right? Something that we do not have a control over at all. Okay, so that means the price can come then lower, and you will see sort of that capitulation that I'm hoping, or is on having the thoughts that is a very valid idea of what might happen if you do get a recession, or some other things that might push the market, okay? And you will see a run at the highs, expand lower. Where is the SR? Where's the clean SR point, right? So the clean SR point would then be right there, okay? If you take some of these, right? I don't want to clutter. I don't like having anything on the chart. I just want to show you guys. Okay, so for the bearish case, then you will see price and extend, and you're having the EMAs that will show back down towards some of these levels, okay? And we're having right there, we're having the low, okay? And probably we're going to see exactly straight to the 70% retracement, all right? So the 70% retracement, and then as well, you know, you can slam on some ADR tools as well, right? For the bearish case, just want to show you sort of the confluence here, if that would be the case, and you're having the extended move straight into that level, if that would to happen, okay? So there you have sort of the both scenarios for that, right? And the same, you know, you can argue the same kind of price action goes, you know, for S&P 500. I don't need to go in detail on all of them. You know, it's just that, you know, Nasdaq has been a bit weaker due to those reasons, as I just told you, and then, you know, the same goes, right? So the same range is the same sort of structure. It's just that where they are equal to the highs is just different, okay? And then you're seeing here as well. So S&P 500 on a weekly trying to cross above the 100 EMA, and you're having the 200 below here, holding price, right? Holding price. So for price, to usually go for a longer period below these the CMAs, it's not often, right? So even in a bear market, that happens sometimes. So you're having an example from the last bear market or extreme case on the drop on 2008, right? So we had the same here as we created the high. It took a while before we actually got the initial drop, okay? The larger, and then as it first was reclaimed back above, you can see you had that the next rally, and all of sell-offs here. You can see how this EMAs is quite important, especially the 200, right? So the 200 and 100, how it has been holding price all the way, right? So only during sort of a proper bear market that you will actually see price moving below this and actually trading below this, only during a crisis. Okay, so long as it's not crisis, you will see price might aggressively dip into that, and every single time price have deviated or gone much below or into the 200 EMA on a weekly, has been bought up fairly quickly and continue its trend. Okay, so with that said, last quick look at Dow Jones, okay, which is very close to the highs already, okay, and this is if you take this on a reverse, and you can see from the highs, it doesn't give from the ultimate highs, that we're actually sitting close smack in the 70 and the 80 fib, okay, for Dow Jones. We just touched that, okay. So I think even if we do, it doesn't really look at it at the moment, but we might get a raid into the weekly market structure high, and maybe even retest 335 600 there, and before you sort of getting a drop towards, right? So you can see how having the 70 and the 200 EMA lining up nicely. So if you do get that sort of sell-off, probably going to be a good, potentially good buying opportunity. And the same here, that if this is, so the range on this, it's important that you understand sort of range, because a range is a cumulative pattern, and what follows a range is expansion, okay? You can always trade the range as well, but what usually follows is expansion, okay? So if you do, if this range, give me a second. If you break above and hold this range, okay, you will see that all of the EMAs also will be flipped, okay, and price will then try to start a new trend, and you will see price expand, right, and expand, and you will see all-time highs on Dow Jones, okay, and then this would look like, you can sort of call it a deviation, but what it actually is just a high time frame, a cumulative pattern, okay, and followed by EMAs and whatnot to support this by algorithms, etc. Okay, so now we're having sort of that concept gone through with the equities. Let's just do a quick walkthrough here on Euro USD before we move into Bitcoin and Ethereum. So we're having some levels here. To me, give me a second there. Let's go to the 3-day. We can reverse. No, it doesn't give me what I want. All right, so regardless, this, we are getting into some highly important levels. Now, in terms of structure, let me just point out a few things here. So one is that you can see that we're getting on the extreme end of the RSI on a 3-day, okay? And, it's not before we had the 3-day divergence here on Euro USD, where we had sort of the larger top, then triple diverge, so to speak, and you're having that aggressive sell-off, okay, and then here you're having sort of a cumulative divergence on the lower end here, okay, and we're getting up back up to oversold regions, overbought, sorry, and except the EMA, so we are above the 100, okay, and we are finding now the 3-day 200 EMA as a resistance. We're holding on the daily, they have flipped, okay, and on a weekly we're having here basis, we're having around the 100, and we also have the 200 just above. Above that, I don't think we're going to hit them to begin with, but that will be sort of the ultimate level here will be some of this. I'm just going to discuss these two structures separately. Okay, it's important to me. So the structure here on EURUSD on a weekly basis is that this here, right? This is a clean SR point, okay? But overall, the upper end you're having a confluence is that this is a SR, okay? And this is sort of the larger consolidation. Now, if you draw that to the outside, you can see that you're having in between the 200 and the 100. I think that will be sort of the upper part where EURUSD will go up before without having any kind of pullbacks. Okay, I don't think we will be able to go any higher than that without having any pullbacks. Now, in my opinion, how I view this is that this is the high, and we will see a retest into that void. Give me a second. Just want to point. Give me a second. So these concepts bases the idea of crypto as well. Okay, so that's why I find it important. So you're seeing here having, I just want to point this out. Sorry guys, it might be a bit boring, but we're having this the 70 and 80. Okay, and we now smacked the 70. Okay, and on a 3-day, let's just want to check on the monthly as well. All right, so on the monthly we're having on the 20, the weekly, the 100, the 3-day, the 200. Okay, so we are within a proper level where algorithms are going to kick in. Okay, so if you watch this on a 3-day, you can see that here is your consolidation. Okay, and we hitting that first target. I think this is a good level to potentially start looking for price to come back down. Okay, that's my viewpoint on this. And now the other part I just want to show as well. So on a weekly basis, structure-wise, high time frame. Okay, sort of what perfection is. I want to point out this is the high, the void there from above. You're having this is sort of the neckline for the sell-off. Okay, which is accumulative as well, and which is sort of the top pattern of the formation. Now, if you drag that level further out, you will see that it is straight into this 80% retracement region. And I think you're seeing here you're having a high, lower high, and I think that would be a perfect retest of that next lower high if that ever happens, right? If you do get into those levels, these levels are weekly supply levels. Okay, which means that if you trade those, you're having an extreme high probability of compounding a trade into your own advantage and interest. Okay, so you're having current level, of course, probably a decent sell. If price goes up into the other part, that will be an extremely good level. All right, so just want to point these levels out so you can put them on the chart as well. Now, before we end go into crypto, just want to point out the dollar chart as well. Okay, so you're having the dollar chart. You can see how the EMAs has flipped here. You're having the 70 and 80 structure-wise, the same sort of as we had on the close to EURUSD. This is sort of the neckline place for this sell-off, right? So this is the distribution. What I mean by that is that this is the distributive pattern, the cumulative pattern of sell orders that pushed price down. And we're probably going to revisit that at some point, and we're having here is your low, and I think prices will try to reverse here. If you look at the RSI on a daily basis, we might starting to create some oversold and some divergence on the RSI. If you're starting to flip some of these levels, as I said, and then price come back up, retest at least some of these EMAs. If the environment is correct, we can see another push back up higher, okay, for the USD chart. And then would also correspond with a sell-off in equities and crypto. All right, now let's go to Bitcoin, okay, and we're having a few different charts. Let's take this to the weekly and watch, all right, to the weekly, and then we're having the 1 day, 8 hour, and 1 hour. So let's start off with the weekly. All right. So on the weekly basis here, how you can see how we expanded into the 200 EMA, much higher than actually I expected from this, and you're having a fairly close to a double top here, close to a double top, 200 EMA daily market structure high resting there as well. Okay. And then we're having the 100 EMA close to the 30K target in this previous consolidation, and sort of the sell-off, a retest from that base formation. Okay, so overall, if you watch this, as I mentioned earlier, in terms of structure-wise, right? So for me, when I view this chart and I have these indicators on, I can already see sort of when we hit the bottom, where is my target, right? Where's the cumulative? If the bottom is already in, where do I want to buy, right? I want to buy at the SR, weekly market structure high and weekly structure low, right? Means that for me, just by having the indicators on, I know that if price would come back down and we're starting to accumulate here, where is the target, right? Of course, right, we're having the EMA, but on a weekly basis, expansion, right? Probably going to retest on that, but we could see this, right, at some point. And that's why I really like this, those indicators. Don't really need anything on the chart. You can already see sort of the direction if that would be the case. And I just want to see if it's possible to get a reverse on this. Let's see where it takes me, right? So if you do get a reverse here, you can see that we're having two targets as well here for 26 and closer to the 30 as well, all right? But I don't like that as much. Okay, so let's take that back up. Now, in terms of that, you can do sort of the same concept from this low to that high, and you can see that we are sitting within that range, right? So we're sitting within the 70 and 80% range from the all-time lows. Okay, and also with the EMAs here capping price. Let's go to the 3-day. You can see the same here. And since we're having less price data history, it's better to watch sort of the daily chart or 3-day chart for this. All right. So in simple terms here, you can have having the 80 and 70%. You see here how it's aligned within this structure. And this as well is sort of in terms of where we are, you know, this is one of the better places to start looking for a pullback and selling, okay? Unless or regardless, I think we're going to get a pullback. But as I said, if equities and the dollar chart start pumping, we have to reassess sort of the overall picture moving forward into the FOMC if we actually are going to see this as a distributive pattern, because we're getting back to the same discussion, right? So let me just, I know it's boring, but you have to get back to the same discussion as we had in equities. Is this accumulative, right? Or is it distributive? If price is accumulating at these levels, we are going to see 40K next, right? 40K minimum, I think probably even 60K, right? If we are accumulating here, 40K will be tagged, and then 60K. Now, the question is this, is a cumulative pattern, or is it just a retest? Regardless if we are going to get a pullback from current level, or if you're actually going to get another push towards 30K and then see lower prices into the larger demand zone, right? That is sort of the discussion that 2023 is going to tell us. And the market is dynamic, right? So you can't say that it won't or will happen. It depends what happens. How will the economy behave? Will we have any events that might trigger a recession, right? Because remember that sometimes we are sitting on the doorstep of a recession, and it will be up to the central banks, companies, and whatnot to avoid it, right? It's not up to me and you on Twitter to avoid a recession, right? It's out of our hands. So we just have to follow the dynamics of the market and reassess sort of the overall idea of this, right? And that the market creates weekly and monthly and high time frame trends that are setting up. And if you shift sort of the focus and sort of admit when you are wrong, you can still get on massive price movements, okay? And this is sort of the job as a trader. It always a risk to missing out on opportunities. It's just part of trading. You just have to be content with it, right? And you won't hit every move. Now let's go quickly just into some lower time frames. just to discuss what we are seeing. Okay, so you can see here as well. Let me get here to 8-hour chart. It's fairly nice structure wise. On an 8-hour chart, we're having the levels. So you see already got the levels I'm watching, right? So if I want to take a short, we can reverse this as well, right? So you're having the 7, let's check the reverse if it's taking me up there. No, it doesn't. So this is all support level, but the reverse of this where I want to see and take price is that up into these levels, even current levels, okay? These levels, these highs, we're sitting close to a supply zone. We might go higher, we might not, doesn't really matter, but we're sitting very close inside a supply zone. We are within a level of void, right? So once price gives in, it will expand extreme to the downside again, right? And that's something you have to understand, and it's important part of trading. So let's just show you what I mean by that. When price sitting at these levels, what you will see is that at some point, right, we might go higher, we might go like this, whatever it does, but you will see a swift price movement coming, okay, due to the structure. The structure is of this, right? This is the structure you're working with. You have an inefficient move to the upside. Once you get price coming back down, you will see an aggressive move, right? But the timing is always difficult, right? Will price sort of come lower, you know, and then do it? Will we tag the structure high, right? Will it go a bit higher? Doesn't need to set up a larger distributive pattern, something similar to this, right? Doesn't need to be longer, right? These are questions. Timing is always difficult. You know, we'll have multiple highs, create divergence, right? If you look at the RSI on 8-hour, we already have some kind of divergence, right? Will it continue or will it expand? Okay, all of these are questions that, of course, you don't have answer to, right? So what I would prefer a raid into the void because it creates more weakness. If price extends, it creates more weakness. If price retests, it creates more short-term strength and less strength to push price lower, right? So the more it goes up inefficiently like this, the weaker it gets and the higher there's a chance to get a decent pullback, all right? Or higher chance it is to get a decent pullback. Now, in terms of levels to buy, if you are a bull, you're having daily market structure low, could be a decent place to bid depending on what we see. But overall, as a high time frame or extremely good level to bid will be this 80 and 70, and that will be the same level on a weekly, okay, where you're having this weekly market structure, okay? So on a weekly basis, that also a very good demand zone, depending on how you want to play it, okay? So that's with the Bitcoin. Ethereum is very similar. We can take a very quick look at this. Already for me, you know, let's go to a weekly very quick, all right? So on a weekly basis, all right, if bottom is in, price will go to 3K, okay? So, you know, you shouldn't be in a hurry. Now you're still having lower highs. So of the last structure, we're still in a bearish structure, okay? You're having the 200, the 100 is still above price as a resistance level, okay? And then you're having, in terms of on a 3-day of this structure, what you want to see here is that you're having 100, 200, the 70 and 80%, the void, top layer, lower high. I think this is a very strong sell level for Ethereum, extremely strong sell level. So the question is, will we dig into some of these levels? 1,800 will be extremely decent level to potentially sell, but we will see. We need more information in terms of structure before you make up the decision. And then you're having here, in terms of this last structure, where is the demand? 80 and 70, perfect level, perfection, right? Don't need to plot anything on the chart when you have these indicators, in my opinion, okay? As long as you understand price and market structure. Decent level. Now, that's about the same concept as for as for Bitcoin. So let's just quickly look at some of these coins, right? So, if you watched the last live stream months ago or whenever it was, we're having the same levels. Nothing has changed, right? We digged into the demand zone. You're having pumps. Some people caught this, probably made some money, but overall, from the high, these are not massive price movements, okay? And there's no reason to be extreme on this. Just take your time. So we're having demand. I would prefer price to dig a bit deeper, or even, if structure sort of getting flipped, right, you will start seeing price rounding off, right? So if this is sort of the bottom, you will see price rounding off, right? It will be whatever it does, right? And then at some point, sort of cup and handle, Adam and Eve, it just means the price is sitting here, failing to drive lower, accumulating basically, right? And you're having less and less sell. So price is sitting there. Once markets are ready, that more money, meaning that if you're having the order book, right, and there will be very small amount of selling compared to what kind of buy pressure comes in, and then usually price extends, right? And the weakness from that creates the price to run. Okay, and then you're having some decent level here for AVAX once that happens, right? But the timing is important as well, unless you're accumulating. If you're accumulating, you're just accumulating, right? But for me, I want to try to get the timing more correct, and I think we might continue a bit lower like this on very low liquidity before sort of getting that initial drive, right? So for me, I view this more of a distributive range with probably a quick sell-off and then sort of price coming back up, so that's my opinion. And you will see sort of the same concept on most altcoins as well. And you can use this idea as well. I just showed here on FTM as well. You can see we're going into the double high, the void. Let's see sort of what comes along, right? And then you're having sort of the levels higher that price might go to, if you're going to see sort of a larger price movement, right? But if you watch the log scale and you sort of get another drive lower, right? You can see that if this turns a distributive pattern, right, and then price line, you can see something like that as well. Okay, doesn't need to be that extreme, but you get the point, right? And then then you're getting the next accumulative pattern to take price higher. Okay, that's something I hope will happen. And for me, I don't know, it's way too easy. I don't know, the road we have been taking now is way too easy. Anyhow, now let's go to sushi. I just think we're just gonna sit there. I don't really think we're gonna get any major pumps. Binance, always decent. The same here, you're having retest of the highs as well. Binance is usually strong. Maybe a quick sell-off below there, and then again, same concept, something like that. That's what I'm hoping for on altcoins. What else? Near actually hit very close to my ultimate level, but I still think as none of the other ones has probably bottomed out, I think near as well. I'm gonna go much more sideways before anything else. Axe as well, just hitting sort of the SR. I still think it's just a retest, and remember that it was just a fat finger. A guy had a fat finger order on Axe, and we actually hit a double top, and we're still not even close to those levels during this kind of a demand. I rather think price might come back towards the $1 mark, and that's going to be sort of a decent buy. Remember that January 2023 is actually nearly the first bullish month we had since the top. We basically had like one or two. Yeah, but those have probably been weekly. Give me a second. Yeah, it's the second bullish month in since when? Since November 2021, right? So it's no point to celebrate way too soon, in my opinion. All right, so that's Axe, Solana, I think this is going to be a very good selling opportunity. I hope we might get one more push higher. Then I'm going to sell with closed eyes, selling, and then see if price can come back towards the 4. If you go on a log scale, I think, you know, a close SR towards 4, that's probably going to be a very good, extremely good level to start buying. But in terms of structure, this is what I want to see on the other altcoins, right? This is sort of the structure I want to see. I want to see this sideways pattern, sharp sell-off, and then price coming back up and continuing, okay? And this sort of price action that we saw on Solana, this is what I want to see on these other altcoins. Okay, so I think that's about it for this particular session. I'm gonna continue, so next time we're gonna do some more educational stuff as well, and I'm gonna share this on Telegram and on Twitter, and include the ref link as well as the template for the color scheme and whatnot with the indicators, and you can see how it works for you. Okay, guys, let's talk there. Peace out.